Joining me here at the Gherkin is the independent energy expert, Cornelia Meyer, who's the Chief Executive of the asset management company MRL Corporation. Cornelia, you advise people on where to invest. What is it that's attractive about British water companies?
Well, if you look at Britain, the British economy hasn't done too well, unfortunately, over the last decade or the last few years since 2008. But the utilities always have done well because you need to consume water whether the economy is up, down or sideways. So that's very helpful.
Thames Water, Keldar, which owns Yorkshire. In recent years, we've seen a flurry of investments attracting money from funds in China, in Australia, in Abu Dhabi. Are they simply after the dividend? I mean, it's interesting that it seems like Severn Trent has regularly paid out year after year £150 million to
I don't think
shareholders.
it's just the dividend, but if you look at who the investors here, it's the Kuwait Investment Office, it's the infrastructure fund of the Ottawa Municipal Worker Pension Fund, and it's the superannuity fund of Britain. These are all people who need to invest globally, so they need to have a good portfolio. So if you have to invest in Britain, you might as well invest in something that is safe. At the same time, especially if you're a pension fund, you need the revenue because, you know, you have pensioners whom you need to give a pension.
Speaking of revenues, I mean, the timing of this is curious, isn't it? Because the regulator hasn't yet set out what sort of revenues that water companies, well, the prices they're going to be allowed to charge their customers over the next 5-year period.
It's a bit odd because this has, as you say, a 5-year regulatory period, and we're bang in the middle of one. So usually you see these takeovers when you saw the acquisition of Thames Water was at the beginning of a regulatory cycle. We are now in the middle of a regulatory cycle, but I think it's also a sign of where else do you want to invest. I mean, if you have to have some investment in Britain, then this is probably one of the safest bets.
And we're talking about this obviously from the point of view of shareholders. This is a company that has 7.5 million customers in the Midlands and also in Wales. How relaxed should we be about foreign investment in British companies? I mean, to a degree, this is profits disappearing overseas, isn't it?
Not necessarily. I mean, these are good investors. I mean, all of these three are very quality investors. If you look at the Kuwait Investment Office, I couldn't think of more quality investors. And you know, the thing is, we need capital in this country, so it's good if we have capital inflows. And look at our manufacturing sector. We still have a wonderful manufacturing sector. It's just a lot of it is no longer British owned but foreign owned. You know, Nissan here creates jobs, keeps people employed. So let's not be too choosy as to where the money comes from.
Tell us about the superannuation scheme. I mean, it's a UK pension
yes.
fund. Whose pensions?
It's the university. It's the university pension fund. So all the university employees. So those are very good people. They
stand to benefit from British water and profits in Severn Trent.
Yes, absolutely, and they can drink it as well.
Do you know, this whole industry was deregulated, was privatised in 1989. Briefly, has privatisation delivered for consumers?
Well, I think it has made things, obviously it has made them more expensive. What we would like to see, like with water, like with railways, what one needs to make sure, and that's where the regulator needs to kick in, that investments are kept, you know, up to speed.
Thank you very much for your thoughts. There we are, confirmation. The share price closing up at 13% in a single day. Thank you very much.